Hey, good morning. It is Monday, June 12th, 7 a.m. New York time. Brand new week. Hope your weekend was as good as mine was. And hope you got to do something fun, get away from the charts for a little bit, get away from social media. And yeah, we are back at it. Venator trading, man. Back in the tree stand, hunting. High probability setups. So we're taking 10K all the way to 2 million in funding by the end of this year. Hopefully, we will see. But we're off to a good start. Today we are officially 30 days. We started this channel 30 days ago. And we're doing pretty well. We passed phase 1 and phase 2 of a 10K challenge. We traded a funded account for 14 days. We got our profit split payout, and now we have purchased a brand new 10K challenge to trade alongside of our funded account. So, that's pretty good for 30 days, I think. I think that's pretty good. So I didn't really have any major expectations except just taking high probability setups, showing people how to do this. And that's what we've done. So I've updated the board here a little bit. So kept all this up here the same, 10K to $2 million funding challenge. We are still currently only funded our $10,000, but hopefully in the next couple weeks we can increase that number right there after we get a new challenge passed. I'm going to keep every new step we take, I will update our wins and losses and break-evens. I thought about doing a cumulative because that would, from the very beginning, from phase 1 of the very first challenge, maybe I should do that. I don't know. But that would be 6 wins, 5 losses, and 4 break-evens. And if you take out the break-evens, the 6 wins and 5 losses is historically very accurate for the way I trade this system. So it is basically just above 50%, which is, almost dead on exactly the way I trade and have become profitable, funded, and received payouts. So it does work. This is proof, the concept in the making, the prototype right here live every single day. How many other of your mentors are out there doing this for free, walking you through the New York session, holding your hand and showing you exactly when to take trades, when not to take trades, posting the results on Twitter, live. I have met so many cool people on Twitter in the last few days that are DMing me, asking me questions, looking for help. And I wish I would have had someone to do this for me when I first started. And maybe I wouldn't have had to fail 30 challenges. But those mistakes, they don't disqualify me from helping people now. They are actually what qualify me to help other people now. Is failing 30 challenges in a row before I was able to figure out what the hell I was doing and go from being a consistently losing and failing as a trader to consistently winning and being profitable as a trader. And all in all, that took me 4.5 years. So the journey was long. I thought about quitting many, many times. But here we are, man. I'm glad I stuck it out, and I want to encourage you to stick it out. Hang in there. Hang in there. Good morning, guys. Welcome in. Michael and David. Good to see you guys in the chat there. Any other viewers, pop in, say hi, introduce yourself. I'd love to know who you are. I'm doing great, man. I feel good. How are you? How are you guys doing? How was your weekend? What did you do? Anything fun? I am so excited for this week. I don't even know that I'm going to trade. In fact, when I pulled up the economic calendar and I saw everything that's happening this week, my first reaction is this is going to be fun to watch, not fun to trade. But hopefully, after all of the massive news events that are coming out this week, we'll get some direction for our pairs over the next for the next rest of June. We can start trending again. What are we going to retrace and aim for these relative equal highs up here? Are we going to continue our downtrend on euro? There's a lot of stuff to think about and look at, and with all of the red folder high impact news that's coming out this week, I am extremely neutral on trying to find high probability setups. If we find them, it will be after news hits. It will be after we get some kind of direction and liquidity grabs from the news dropping. So that's how we're going to play this. If you're looking at this week and you're thinking, oh man, I'm going to trade every day, look at all of this news, I would caution you and tell you that I used to do that, and I used to fail lots of challenges during high impact news weeks. So we'll be careful, we'll be cautious, we'll be watchful and waiting. And look at all this down here. Look at all of that. That is just a mess. That's just euro dollar. So, a lot of fun. We're going to see a lot of big candles print. That's going to be fun to watch. It'll be fun to see how we can make our own predictions on what's going to happen, but we're not going to get super antsy about pulling the trigger this week. There is nothing but time on our side to trade this funded account and to trade our new phase one. So what happened last week was we were up 2% heading into Friday, and we took a trade on Friday. In fact, let me drop down here into Friday, and I want to show you how I could have done this better. I reviewed this trade, and I wish I would have taken a different trade, and let me tell you why. Because our trade was right here, so we had anticipated this down close candle as being the last down close candle before, this candle, up close before we ran liquidity and then we ran higher. And what we did not see above this 15-minute candle was a strong displacement. You can see it started to displace right here. At one point, this 15-minute candle was all the way back up here. And we were thinking, okay, great. We've broken that high. We've closed above it. And then it rejected hard. The next candle, we were like, this candle, the second candle, we were like, okay, well, it's going back up. It's going to break it. And then we got a third candle rejection. When this third candle rejected off of these highs and didn't close above, we should have canceled the order on this trade. When I look back at it, where's my, it's down here. Move this over here. We were actually going along off of this breaker. We were identifying this as a breaker, and we had identified this gap here, and I think our stop was somewhere in here. I need to go back and look, but I think it was down here somewhere, like at the body of that. But here's that 15-minute, that's the 5-minute here. But once it broke up, once it came back down here on the 15-minute, we probably should have just canceled this. This was the actual trade we should have waited on. It ran buy side liquidity. Then it closed below. And taking that move down would have been the ideal setup right here. Ideal. You had a down close candle, you run buy side liquidity, you drop down below it, fair value gap inside. This was a beautiful setup, and we just were not patient enough, and we did not, after these rejection wicks up here, and it failed to displace higher, we should have canceled that order and been like, oh wait, this is probably going to reverse here. It didn't continue to displace. And that's such a key part of my strategy, is displacement above those breakers. And but that would have been just an absolutely gorgeous trade right here. I probably would have put it just above the breaker right there. So about 7 pips. And your easy 1 to 2. You could even put it above the high and still gotten an easy 1 to 2. That would have been a beautiful trade to end Friday, but we didn't take it. We took the wrong trade, and that happens, and no big deal. But because we had such good risk management going into Friday, we knew we would still be in profit at the end of our trading session. No matter what, we would still get our refund, we would still get our profit split, and we would be able to purchase at bare minimum another 10K account. And so that's what ended up happening. I got the payout on Sunday with Bespoke, went ahead and put that in. That has not been processed yet, so I'm still waiting for them to process that, which means the 10K funded account, as of today, this morning, I cannot place a trade on the funded account yet until they process the payout. And because it happened on a Sunday, I'm guessing over the weekend, they'll get to it at some point today. I'm not super stressed about it. It's just the way it worked out. But I do have the 10K challenge that I have purchased for we're on phase 1, so that I can trade live if we find a setup here this morning. Then we can use that account. So I do have this set up now to where we're going to trade this with a trade copier. So the way I'm going to do this is I'm going to use my 10K funded account as my master account. And I'm going to show you guys how I have this set up in just a minute. Good morning, Sam. I saw you pop in there. Just haven't had a chance to say good morning. Welcome back. I'm going to show you guys how I have this set up. I'm using socialtradertools.com or tool.com. I don't know. I'll look at it in a second. But I have this account, my funded account, set up. I have this account right here as my master account. And any trade I take on this account will be copied over to the phase 1 challenge. And my phase 1 challenge is still 8%. So my goal here is 10,800. So if we reach this goal in the next couple of weeks, that means the 10K funded account will also be 8% in profit. And at our next payout, we'll be able to then purchase a whatever account I can for whatever that profit split is, probably around like a 100K account. And so as this moves into phase 2, we would add a 100K phase 1. And this would still be our master account that we would copy everything off of. Hey, my Gotti, good morning. Let's catch these pips, man. Yeah, I'm just trying to catch trades. But yeah, we got to catch pips to catch trades. And that's what the name of the game is. So But that's what we're at right now, and that's what we're looking at is we're waiting for our payout to be processed from Bespoke into my deal account. And then once that is done, they will lift the restriction on trading this funded account. But this one, we're ready to go. We can go ahead and take trades on that right now. And so let me show you how I have this set up on Social Trader Tools. All right, so here is the dashboard for socialtradertools.com. All right, this is who I'm using. If I go to, well, you can't really see that. Here's my dashboard. It shows you the two accounts that I have set up currently. It shows you their equity. You can see on the master funded account here, it still shows the small profit because that has not been reset by Bespoke yet, which is why I cannot trade on it, because I have requested the payout off of that plus my refund. So that's why it still shows the equity as 3151 in there. And then you can see the brand new challenge here of $10,000. It'll show me any other information here as we go through the process. This is what this looks like. Okay, so if I go to my accounts, again, you can see my accounts here. They're all right here. This is happening live. Okay. So what now let me go to I'm gonna show you how I have Trade Copier over here it's under this tab. If you use Social Trader Tools, it's not difficult to figure out, but once you load your accounts in, which I'm not going to show you the settings there because I believe it shows you my passwords on those, but I need to go look. But on the Trade Copier side, I have this is the Trade Copier. I can create different copiers. If I had multiple accounts in here, I could trade just to one. I could trade multiple, but this one is the 10K Phase 1 Bespoke account. Maverick, good morning, brother. Would it get more complicated if the accounts are different sizes to manage risk? No, I'm going to show you how we do that. So here on this 10K account, I have 10K Bespoke funding, and it's on right now. If I click this, it would turn it off. And here's the configuration. All right, so we're copying from our 10K live funded account, okay? We're sending to Bespoke funding Phase 1. Okay, so we're copying from our funded account to our challenge. Copier mode is currently off because I can't take any trades on my master account, but when it's on, I would click on, and then I would click update. Risk settings. Now this is how you manage. This is where you would set up your risk management for your different size accounts. So your first option is reverse trades. So let's say you you could actually fade yourself. Basically, if you're such a bad trader, you're like, man, I cannot pass challenges. I'm gonna buy 2 challenges. I'm gonna trade the one because I know I'm gonna fail it, and I'm just gonna reverse trade the other challenge. You could do that. Not a great idea. You can do that. You can also use this. Let's say you're funded at 2 different prop firms and you wanted to hedge your accounts. You can, your prop firm will shut you down. If you have 2 accounts with the same prop firm and you just reverse trade each one, they will violate you. That is not acceptable because you can just max lot on each account in opposite directions, and one of them technically would be a big winner. They will not let you do that. But you can from firm to firm. Okay, so you could have, let's say, Bespoke, you have a $100,000 account with Bespoke, and you have a $100,000 with MyFundedFX. You could hedge the accounts against each other. So you could reverse trade off of your Bespoke account and take the opposite trade on your MyFundedFX account. Anyway, that's what that is. We're not reverse trading. What kind of risk type do we want to copy? We want to multiply the lots from our 10K master account. Okay, we're going to use lot multiplier. The different options are a fixed lot. So you could say whatever trade my master account takes, you're going to take the same trade and you're going to use this specific lot, 1 lot, 2 lots, 2.5 lots, whatever it is. You're just going to use a specific fixed lot. We don't want that. Risk multiplier by equity. We could set it up to say, or by balance. So you could say, I want you to risk 2% of the balance or 2% of the equity when you get a trade from the master account. I don't want to do that because as my account grows, I'm not risking 2% of my balance. I'm risking 2% of the original funded account size. So even if I'm up 8%, on a $10,000 account, that would be $10,800. I'm not risking 2% of $10,800. I'm risking 2% of the original $10,000. So I have a set $200 risk per trade off of this $10,000 account, no matter how large my profit is. Okay, so I don't want to risk by balance. You can. I don't want to risk by equity. I want to do lot multiplier. And so with lot multiplier, this means that whatever lot comes in from the master account, the slave account, the challenge account, will multiply that lot and then use whatever multiplier I have for this. I have it set up for 1. So it's going to multiply the master account by 1, which ultimately means it's going to just copy that 10K account because we're trading onto a 10K account. They're the exact same. So 1 times whatever that lot is that lot. So if it gets a 2.5 lot from the master account, it's going to multiply that by 1. 1 times 2.5 is 2.5. So it's multiplying it by 1, which means it's just straight up copying it lot for lot, lot size for lot size. You can put in slippage. So let's say these are on the same server. They're on the same broker with Bespoke. So there shouldn't be any slippage. They should be pretty much identical, but you can allow for a certain amount of slippage if these accounts happen to be on different brokers or servers. You can say, hey, if it slips by 2 pips, you can still copy this trade, right? Max lot, it doesn't involve these accounts yet, but that could come into play when we get into like a 300K or 400K. And then force a minimum lot. No, I don't want to do that. So that's how you manage risk here inside of your trade copier. You're going to copy off a lot multiplier. If we were copying to a 100K account, it would be 10 times bigger than the 10K master account. So any lot size that comes in from the 10K account onto a 100K account, we would want to multiply by 10. Make sense? So if it got a 2.5 lot from the master account, the 100K account would take that lot, multiply it by 10, and that would be its lot size for the 100K account. Does everybody follow that? So that's how you manage your risk. You just set it all up, you turn it on, and then when you just trade one account and it copies the trades, it multiplies the lots based on all of the risk settings you have here. and it does that. So on stop limits, you go down here on this next order. We want to copy the pending orders, because when I set my orders, I set my entry, my stop loss, and my take profit all at the same time. So yes, I want it to copy any pending orders. I want it to copy my stop loss. I want it to copy my take profit. You can turn on and off any symbols. Let's say you don't want to copy trades if the master account sends you an Aussie New Zealand trade. We can turn that off, right? I just leave these on. I don't even mess with this because I'm not copying from someone else. Like, you could set this up to copy the trades of some other trader, and you can actually subscribe to signal providers on here, and they could be sending you trades from all kinds of random symbols, and you could just toggle on and off the pairs that you don't want to copy trades from. And map symbols is just like the suffixes that you can find on Euro USD .I or whatever the suffix is. It doesn't affect any of this, but that's how. Again, you can. This is currently turned off again because I cannot yet trade my funded account until Bespoke processes my payout. So Bespoke, if you're on here watching, they're not. But if somebody could reach out to Bespoke and tell them to hurry that up, I'd appreciate it. Anyway, that's how we're going to copy and manage these two accounts together, and any future accounts that we add to this will just be added onto this, and we'll set it up the exact same way. And we'll just keep copying trades over into challenges and various funded accounts as we stack them up here. So I hope that's helpful. This is where we're going. There are other trade copiers out there. I've used these guys before. I like them. They're very reliable. I have had very, very few issues. Most of the any issues I've had are when I'm copying from one broker to a different broker. Like if I have an account on like ACAP and it's trying to copy a trade onto, let's say, Purple Markets or whatever, Purple Trader, whatever the thing is, Think Markets. I'm just trying to think of a different broker. The latency sometimes between the two could keep the trade that you wanted to copy could not get executed, but has happened very, 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 very few times. This is the way I do it. I have all of these accounts on my MT5 terminal as well. So at any time, I can just go into the MT5 account and open and close trades. It's not like I'm just relying solely on this. I do have them all on my MT5. But this just makes it easier. With just two accounts, it's easy for me to go over to my MT5 and I could just do the exact same trades 2 different times. Typically, we have enough time when we're identifying a trade setup that will work. But when we're doing 3 or 4 or eventually 6 or 7 accounts, because we've got some in phase 1, some in phase 2, and multiple funded accounts, having the trade copier set up is going to be the way to go. So we're just going to go ahead and start it here with these 2 so we get in the habit of using it. So I'll go ahead and close that out and get back over here to Trading View, pull that back up, and we can start looking at some start doing some analysis here. All right. Whew. Monday morning. Still got some junk in my eye, I think. All right, let's jump into Euro dollar. We're going to jump up to our monthly time frame here real quick. And we're just going to kind of look and see what we see. So you can see we were in this big downtrend on the monthly. We have broken through this order block. And we've now created a higher high. We created a higher low. We've created a new higher high. And we're currently back inside this bullish monthly order block. So this down closed monthly candle is currently being respected and could be the catalyst to push price higher back up into this large weekly. We'll see this in a moment, but this is a large weekly volume imbalance and this next monthly bearish order block. You do have relative equal highs up here between April and May that it could want to be a draw on liquidity, but you also have relative equal lows on the sell side, and we're kind of sitting about 50% of the way. We have currently reached back up and closed in. Let me zoom in here so you can see this. Y'all can see this a little bit better. We've closed in. When we open down here, we've now reached back up and we've now retested the wick on this April candle. So it's not going to leave a fair value gap. If it drops from here, there will be no fair value gap. You can see a large monthly fair value gap down here. So you have relative equal lows here with a fair value gap below. So maybe that's where we go. Right now, we're in the middle of a range. And so we did change structure. We did make a new high. And we've pulled back into this bearish order block. On the weekly, here is the weekly volume imbalance above these relative equal highs. Okay, so long term, that is definitely a draw on liquidity, but you can also see the relative equal lows way down here around 105 area. And then you've got the larger fair value gap, which you saw in the monthly way down here. But you can see we're just kind of moving sideways right now. For the last couple months, we're in a range, right? We're not in this trending mode. We've moved up harshly, pull back, another big move up. We've taken out liquidity. We did not displace above this high. We did not get a big displaced candle above that high. Right? Every single one of these has pulled up, rejected. All the bodies of these candles have respected that high. It did not displace above it, which is often a sign of reversal. And what happened? We had our reversal and pullback. We've reached down into an OTE of this leg up, and we've since pulled back off of that volume imbalance here and here on the daily time frame. So daily time frame, you had a volume imbalance. This is a weekly volume balance. It's currently being held down by. We have taken out Friday and Thursday's high currently on the Monday candle. We opened, dropped down a little bit, filled in this small, tiny little fair value gap here. Small little fair value gap right here from last week. We dropped down into it overnight in the Asian session, and then we pushed up, and we have since taken out the buy side liquidity above these old highs last week. So we've taken last week's high right here, and we're currently pulling back down inside of this larger range that we were in most of last week. So you can see how price dipped through this volume imbalance, reacted off of the weekly volume imbalance back to the daily volume imbalance. It acted as support here multiple times. We've pushed back into the weekly volume imbalance. We created some liquidity and we've dropped down into it overnight. We pushed back up. So this weekly volume imbalance right here and this daily volume imbalance here are key points of interest here in the early part of this week that we're watching to see what does price want to do. You can see on this big 4-hour push up here, there are still some imbalances that have not been filled in on the buy side imbalances side here. If you were to pull a fib from that move, it did reach down into a discount area before it ran that high. So it doesn't necessarily need to come back down into this OTE, but we will stay aware if price does decide to drop down there. Again, I am neutral. Every time I come to the markets, I am expecting not to take a trade. Okay? I'm expecting not to take a trade. This is your Asian session low, and here is your London session right here. The 2 a.m. candle, 3 a.m. dip down. You had a little Judas swing right here, and then it popped up, ran the buy side liquidity up here, and now we've had a pullback. But so far, London overnight since Asia. So you can see here's the Sunday open, dropped down, filled in that daily fair value gap, and we've just run higher all night. And now we pulled back into this larger 1 hour fair value gap here. We're finding some support off of that. We did grab buy side liquidity. If London is going to continue up, if New York, is going to continue the London bullish move up, then you would expect to see a pullback, maybe a little bit deeper into this fair value gap here. And if you drop down into a 15-minute time frame, you can see this is what's called a BPR. So this is what's called balanced price range. So you've had a big down close candle, right? And then when we get back to that same spot, you have a big up close candle. This is inefficient price action that still wants to be rebalanced, typically. Okay, you also have no wick candles down here on this 15-minute, and we know the market does not like to leave no wicks behind. So that could be a potential draw where we would look for and anticipate a possible reversal here. On the 5-minute time frame, you can see the same big down move, and you can see the same big up move inside these candles. So this is still for some reason, when price hits here, it likes to drop through, and when it comes back up, it just plows right back through it very quickly. So we'll just watch away. It dipped into it right here, but it hasn't filled that area back in. So I'd be interested to see, excuse me, the rest of this morning, what happens here. What happens around here? I would be shocked if we come back out and take out the Asian low. That's a big, massive reversal. But again, with all the news coming in this week, likely today is going to be a pause in the market as everyone positions themselves for the news events later this week that start tomorrow. So, you know, I would be very cautious of taking a trade today. I'm just not super stoked about knowing that this big inflation number's coming out tomorrow. Often right before big news events, you just get some consolidation. So it could just hover inside and around this volume imbalance all day today. And then we maybe get the low of the week or the high of the week tomorrow. I don't know. We'll just wait and see. But I do see this as an area of interest here for me, that I want to see how does price react when it tries to rebalance this area here. So we'll watch. All right, Eurodollar. We're going to jump over to, let's look at the dollar now. On the dollar, on the monthly time frame, I need to move this. We're coming back down and testing April's wick. We haven't gotten all the way down there just yet. And you can see we're just in a range here. We're moving sideways. We've stopped kind of this aggressive run up right here, all of 2022. And then 2023, we've basically been dropping, well, the end of last year and into 2023. And now most of this year, we've just been kind of moving sideways here on the dollar. On the daily time frame here, we have two areas marked out where we had a volume imbalance. We still have one further up, and you have these relative equal highs up here around 106 area that will eventually get tagged, but you also have relative equal lows because we're in a range. That makes sense. You're going to have a very defined area of liquidity above and below the range. So we'll look to see if that gets manipulated at all this week. We're still kind of basically right in the middle. So for it to reach either side, there's going to have to be some very large consecutive candles, like these big moves here and here that we may get. There is a nice little fair value gap right here on the daily time frame. So even if I'm bullish, which I am slightly more bullish dollar than anything, you could still see the dollar come down under this low, reach into this small volume imbalance right here and this fair value gap. That could be our first short-term bearish draw on liquidity. It doesn't have to. I'm just, I from this leg up, that's about the, if we're talking premium discount, this is your discount level, your first discount level that you would come to, that you would anticipate that small volume imbalance and this fair value gap. And you have a fair value gap. When you have a fair value gap that's nested inside of an order block, those are typically highly sensitive areas. And so that's why I would be, if we do get a bearish dollar here the first couple of days this week, or even through Wednesday, does this become our turning point on Tuesday or Wednesday when news drops that moves this back up to a new leg higher? The job of making a new low is to make a new high, and the job of making a new high is to form a new low. So that's what we're kind of watching and waiting here on the dollar. You can see so far it's opposite euro. We have dropped down. We moved up into this fair value gap. We closed it in on the daily time frame, just like euro was opposite. We reached down below sell side liquidity, and now we've had a nice push back up. So, you know, is this just going to be a reversal today? Are we going to try to aim for the London and Asian highs, the overnight highs, and take that out? Potentially. We'll watch and wait and see. But you can see here's your sell side liquidity that's been grabbed. So we had this quick energetic move down into sell side liquidity, and now we're currently getting a quick energetic move back up into these sell side imbalances, fair value gaps, whatever you want to call them here. So we'll watch and wait. If you're looking for a premium discount of the dollar here, that would be somewhere in here. And then you've got your OTE area, which lines up with your order block. And no fair value gaps in here, but it's pretty close. This fair value gap, pretty close. So I'd be interested to see if we're going to get a bearish dollar. We would anticipate seeing a reaction off of this area here. If we're going to continue lower down into this fair value gap and volume imbalance back down in here, we'll see. I am slightly bullish on the dollar, but that doesn't mean that over the next couple of days we'll see some bearish price action. I think my higher time frame is still bullish dollar. Well, we'll see. We'll see. Hey, Corey, welcome in. David Dreams, good afternoon. Ghost, hey, Beeswax, welcome back in, guys. Glad you guys are here. I do appreciate you guys coming in and watching. I am doing this to help people learn how to pass challenges. So if this is helping you and you like it, hit that like button. I enjoy doing it. I don't have to do this. Like I'm perfectly fine just trading my funded accounts and passing challenges and stacking accounts privately and not putting all this on YouTube. But I do think it can help people. I do think it can help. So I've talked to probably 10 traders on Twitter over the weekend that were DMing me, asking me questions. How did I get over this? How can I help them do that? And I know that there's literally thousands just like them that are frustrated and failing challenges and not sure what to do. And they're living and trading with this kind of fear of failing again. And they're kind of living with this mindset. Everything that's happening between their ears is really what's keeping them from being able to cross that threshold of failing to profitability. And it just takes so much mental effort and self-discipline to act like a professional trader. Again, I think I said this last week, but it takes so much effort for people to have delayed gratification and just wait. Just wait. If you want to be a professional trader, find out how professional traders trade and then copy that. Do what they do. Don't try to reinvent the wheel. They are profitable and they are getting payouts. So what is it that they're doing that you're not doing? And then once you identify that, you need to make that change. And I know that's easier said than done, but that really is the secret sauce to becoming profitable, is find out what profitable traders are doing and then just copy them. Not necessarily copy their trades, but copy what they do, copy how they think, copy how they act, copy how they mimic and imitate them. I mean, that's what mentorship is all about. I'm going to show you first, and then I'm going to help you, and then I'm going to watch you. And that's what really true teaching is all about. Let me show you how to do this, then we'll do it together, and then you're going to do it on your own. So I hope that this is useful for you guys. That's what I guess is what I'm saying. All right, so you can see on the 30-minute time frame, this up close candle here is what ran liquidity down here, and we are now pushing back up. So this will be, to me, a kind of interesting go or no go for the dollar. Are we going to reverse here? If we get displacement above, that becomes a breaker, obviously. Or is this going to be a lower high formed off of this big down move? Well, we're just going to watch and wait. I have no big anticipation. I'm in no big hurry to find and jump into a potential trade. Let's look at pound dollar here. You can see on the weekly time frame, we left behind a big volume imbalance down here last week. Large volume imbalance left behind. We had a big jump up, a gap up, and we have not traded back down through that yet with a body. So that will act as a draw on liquidity. Currently, our weekly candle on GBP has no wick, and no wicks don't like to be left behind. So we can anticipate that there should be some more downside action, at least today, if not into tomorrow. And you can see right here, you have a beautiful little fair value gap lined up right here that I would think price is going to want to dip down in here a little bit before it wants to run back higher. So I would anticipate, today's candle dipping into here like this a little bit. If not today, tomorrow. Maybe today we just range around, maybe very little, tap it a little bit. Tomorrow with news, maybe you dip into it and then it runs up. I don't know. But that is our first draw on liquidity here. We took out Friday's high, last week's high. We've taken it out, and now we're kind of pulling back down. And I would think that this fair value gap is going to be an interesting draw on liquidity for the pound, either early this week or later as news hits. You can see on our 4-hour time frame right here, that same volume imbalance, that same fair value gap from the daily sits right here. And you can see we've taken out all of the buy side liquidity above these relative equal highs. We've stabbed up into it once, twice, 3 times. We hit the order block, and now we're pulling back away from it. On the 1-hour time frame, you can see this down close candle right here initiated a run on liquidity, and now we're getting displacement back down below that candle. So that could be an interesting possible setup forming here on pound dollar. At least on the hourly time frame, this could be viewed as a breaker. We'll watch and wait and see how this candle closes, but it's leaving behind some fair value gaps here. It's breaking structure, and it's now taken out the Asian low, London high, Asian low. It's kind of opposite of Euro, where Euro ran up hard, and we haven't even gotten close to touching the Asian low on Euro dollar, and on pound dollar we've already taken it. And on DXY, let's see. So here's the Sunday open up here. Asian, London took it, reversed, and now we're back, approaching back up into that Asian range here on the dollar side there. So I'll be interested to see what happens. Again, with news tomorrow, you have red folder pound news with the unemployment rate, and you have red folder inflation rate. Today could just be carving out more liquidity to be used for these news events over the next few days. So be careful, be careful, be careful. Trade with caution this week. Got to be nimble. We are going to react to what price does, and we'll see if we can capitalize on that or not. Michael was looking for a little short on EU, but didn't hit entry and closed my order now that it's come this far down. We'll look over at EU and see if we can see what you were looking for there. Let's look at gold real quick before we do that. Gold is, last week we had an inside week. When we say inside, it means last week's range was inside the prior week's range. So the low and the high were inside the prior week's range. Currently this week, we have not breached last week's high or last week's low, so we're still inside of last week's inside bar. And you can see we're just moving sideways. We've got liquidity above. You have a daily breaker right here. This down close candle initiated a big run on liquidity, which we displaced through, and there's a fair value gap right here on the daily range inside that breaker candle. So potentially you see a pop up, maybe grab these relative equal highs, maybe reach into this fair value gap before gold wants to reach for lower sell side liquidity. Or it runs this sell side liquidity so that it can then target these relative equal highs. Don't know. It's right in the middle of the range. I don't really have a strong bias. It was super whippy last week. I mean, big up moves, big down moves, right into big up moves. It's just very, very, very whippy. So I'm going to wait on gold to give me some more clear definition. I want to see a very strong run of liquidity and then a strong displacement away from that before I try to anticipate and react to the setups. Same with US 30. I'm just going to wait. I need more information on US 30. We're still in this kind of sideways range. We did break up above. We pulled back and now have closed back above this most recent high here. There is some draws on liquidity above. So maybe I'm slightly more bullish. You had an opening gap up from last week to today. So there's currently no wick left behind on that daily candle there. And with that volume imbalance, you're going to expect this gap, this opening gap, to get traded through today or tomorrow. Doesn't have to. You can leave it. But there's not very many daily candles that leave no wicks. There was one here, and then a few days later it got tapped. That's the most recent one, I think. And then after that, they all have wicks. The market just does not like to leave wicks behind. No wicks behind. Hey Jack, welcome in, bud. Good morning. So yeah, I just want to see some more. I want to see some more evidence that that US 30 wants to be bullish and trend higher. It grabbed these lows and had some strong displacement pullbacks, but it's just kind of trickled up. It didn't continue to displace. You see how it displaced here? You didn't get that. It pulled up to it, rejected. We finally broke through, and now we just kind of trickled up. I'm not sold on it yet, I guess, is the best way to say that. So on the euro dollar, you could have viewed these two 15-minute candles as the last down candles that then preceded the run on liquidity above last week's high. And then we had displacement below. You had a fair value gap left behind right here. Inside, you have one here and one here. I'd probably be more inclined to use this fair value gap as an entry if I was targeting that as a trade setup. So you have your 15-minute breaker right here on these two down close candles. You have your fair value gap nested inside. You did get displacement and a close below. Price did come back up. It left two small fair value gaps, but then it just continues to displace lower. And you can see it's pulling into that balanced price range right here. It's going to want to balance out this imbalance and this imbalance overlap. And so very often price will want to see and come back and rebalance that. So that could have been a good trade. It was so early in the New York session, and it's on Monday. While that is technically this is our setup right here. I would not have taken this trade, mostly just because, dadgummit, what's happening here? Why is going on in my chart? Let go. What the heck is going on? Something has locked up on me here. I can't get anything to work. What's going on? There, what happened? Jeez, Louise. That was crazy. This this buy side liquidity, you had relative equal highs right here. This is all buy side liquidity. You see price run it, grab liquidity, and displace away. So this is technically a very beautiful A plus setup. I would label this an A plus setup, except for the fact of time. Time, when it happens, is just as important as the pattern itself. So a run on liquidity, displacement away, a fair value gap nested inside. It is a nice breaker. Not saying that New York can't come back up, touch that in reverse. It can, but I'm never going to jump into a trade as soon as I get on the markets on Monday morning at 7 a.m. I don't care how beautiful it looks. I don't know enough about what's going to happen during that week. I rarely trade on Mondays. So while that is a very nice looking setup, I would not have taken it. But you are accurate. If you saw that and you were trying to take that trade, that is a very nice looking setup. Run on liquidity, displacement away. So maybe that was the one you were looking at. That's exactly what I was looking at. It's just about to hit profit. Just didn't get the entry. Yeah, that happens. It's okay. You saw it. You identified it. You didn't get your price. You didn't miss anything because it didn't get where you wanted it. Price must go to where you want it to go, or there is no trade. There is no trade. Jack gained a few more subs. Have I? I didn't look. Last time I looked was last week, and we were hovering around 150. I did get a few more on Twitter, I think, and maybe some on YouTube, but I had a reply on one of ICT's comments blow up over the weekend. He tweeted out, "I have one thing left to do before I leave in November. Can anyone guess what it is?" And I tweeted out as a reply, everybody were making their guesses, and I said, "Get a funded account and take down a prop firm." And that reply, I mean, it took off. A lot of people were commenting on it, liking it, and from that, I know I picked up several new Twitter followers, but I didn't know what was happening over on YouTube yet. So Mondays aren't the best, but my thought process was we took out last week high, and the setup showed. And then considering all the news today is probably going to consolidate within today's range. I think your analysis is pretty spot on the rest of the week. Yeah, the news coming up the rest of the week. Monday is you're probably not going to get a massive daily expansion. If anything, we just retrace all of the London move here and set up for tomorrow to maybe get a low of the week in. Or we just range ground here and get a high of the weekend, and we'll just have to watch and wait. See how price responds. Use this week to watch candles print. Enjoy showing up and opening your charts, and just enjoy the process of how all of this plays out this week. It's going to be fascinating to watch. And maybe we'll find a setup here or there that, we just can't ignore and we need to take our shot. But I'm just excited to see how it all plays out. I'm excited to see us get out of this range that we've been in with Eurodollar. I'm excited to see if this news can start a new trend for us that we can use for the rest of June and really capitalize on, like we did at the end of May. The middle of May to the end of May is when we just killed it on our phase 1 and phase 2. And then for our funded account, we were inside of all this junk here. Did not do so well. And I told y'all, I do not, when I don't have a super strong bias and we're caught in a range, it is not my cup of tea. I just do not excel in that trading environment, but I do much better when I have a very strong trend to work with and I can identify where I feel like the longer term, higher time trends are moving. So I'm hopeful that we get into a new trend here from and the news this week pushes us that way. Yeah, I still got some stuff in my throat. All right. Pound closed bearish, so we have displaced below this low here. This then is your 1 hour bearish breaker. So you had this last down close candle that preceded the move up. Now, if this candle that we're currently in leaves behind a nice fair value gap, that could be a nice setup to target this low here, the Sunday overnight low. Could be. All right. I'm not calling a trade. I'm not saying anything about that. On the 15-minute time frame, if you drop down there, I would probably want to use this whole range, but you can see there is a small fair value gap inside of here. Right there. So we have a fair value gap nested inside of your breaker. You do have a fair value gap a little bit higher. I would not use this as a breaker, mostly because this swing started down here. And so these down close candles are the ones I would be most interested in using as a breaker. And they line up with your higher time frame breaker. So we'll watch and wait and see potentially if you get a retest of that. Grab liquidity, displace through. So you had an energetic move up, you had a quick energetic move down. We'll see if we get what kind of fair value gap we get left in here, and potentially we might have a setup short here. Potentially. And I'm only putting this up here so that I can say this is foresight. I am not calling this trade. Do not push a button. Do not jump into anything. I'm just telling you, this is our model. We had a run on liquidity. We've had displacement back through. On a lower time frame, we have a fair value gap on the 30-minute. So this is the 30-minute, right? On the 15-minute, it doesn't look as good. There's no fair value gap here. There are some up here. So I would still, this is a nice order block right here on the 15-minute time frame. There is no fair value gap inside, but here on the 30-minute, it does look pretty nice. And on the 1 hour, it also looks pretty nice. But I'm not, I would rather see this hourly candle close as we head into the opens of the New York sessions for the indice markets and see if we get any further reactions. What's Euro doing? Euro, again, you can see the same run on liquidity. That breaker would be way down here. So it's still got a long way to go on its breaker for an hour. For the 30-minute, this would be your 30-minute breaker. You down closed, aggressive move up. On the 15-minute, you saw the one that we've already outlined. It just did not give you an entry. And I told you I would be interested to see what happens as price comes back into this area where it wants to rebalance these imbalances, the sell side imbalance and buy side imbalance that overlap. So I'd be interested to see what happens there. Gold, no interest in anything going on there until it takes out last week's high or last week's low or even yesterday's high or low. I did take out yesterday's or Friday's low, I guess, here. But there's really no, it's just moving sideways. I don't want to touch gold right now. GBP and EU are the ones that look the most interesting to me. But again, it's Monday. It's early in the trading session. I just am, my statistics on Mondays are not great. I have my winning probabilities tend to drastically increase later in the week. Wednesday, Thursday, Fridays are the days that I have the most wins on. Mondays are the days I take the most losses. So this could be just a run on liquidity down here. So that's why I'm there's no wick left behind on this candle. So on this 30-minute candle. So it could be that could work out to be a good trade. I'm not taking it. I'm not calling it, but I am outlining exactly why that could be a good selling opportunity right there. You have to take responsibility for your own accounts and your own trades. I am more interested just to watch price today and most of this week. And I really want to copy trade off of my master account onto my challenge account and keep those kind of moving together. And since I don't have access to my funded account while I'm waiting for Bespoke to process that payout, I'm less inclined to do anything today except watch, analyze, and mark up charts. So you can see price moving off of that. It moved right up into the body. It moved right up into the body of that breaker on the 30-minute. See that, which is also about 50% of the entire breaker, and it's pulled back off of that now pretty aggressively here in the last few minutes. Euro is reacting off of the 15-minute order block that was created here. Hey Nan, good morning, welcome in. I hope your evening is going well over there on the other side of the world. I hope you have a good week as well. I hope we have happy hunting. I love just getting in the tree stand and watching everything happen, man. It's a beautiful, beautiful thing that you have to learn to love. You have to learn to enjoy just sitting and watching candles print without any of this like FOMO or just this antsiness to push a button to get a move, to make some money. That's why you keep Felon Challenges. So Would be nice if you just got a new account to trade on immediately when waiting for a payout. I agree, and I think there are some firms that actually process that pretty immediately. Like as soon as you request a payout, it basically shuts the funded account down, gives you a new funded account to trade, and then if it takes them 8 hours or 24 hours, whatever, to process the payout, you could keep trading live. I think there are some firms that do that. Bespoke. Bespoke's terms say that it takes 24 to 48 hours to process the payout. I did it as soon as, so it was available on June 11th. So as soon as that clock ticked over on Bespoke's time frame, I went in and requested that. So we're approaching 24 hours since I requested that refund. We're actually just over 24 hours. So hopefully we get some kind of, I may have already gotten it. I don't know. I got some emails in here. Let me go check. Nope. Nothing there. Yeah, still nothing from them. So we're just waiting. That's a nice looking move off of that. Did anybody take that trade on their personal account? Anybody get in on that entry right there that we outlined? I did not take it, but that is exactly what a breaker looks like. It's just so early in the Monday session. I know what my Monday record is. I'm very, very less inclined to take any positions early in a Monday session. Was anybody bold enough and brave enough to jump in on a Monday trade right there? I'd be interested to know. As the dollar pulls back up into this order block and this OTE, we'll be watching to see how it reacts. This is the Asian session range. You had your Judas swing on London, and then it broke down. It's grabbed liquidity under here, and now reversing back into, it is back into a premium level there. I can stay on here for probably another 30 minutes or so, 30, 40 minutes, and then I'm going to have to get off and take care of a few things this morning. I will keep my phone on me while I'm out and about. And if something pops up, I'll post it on Twitter, but again, I'm not anticipating me pulling the trigger on anything today until I get the that funded account reset. I'd really like to start these two together. Bespoke does have a 3-day minimum trading rule, so you have to trade for 3 days on any new challenges. I bought this 10K challenge on Friday or Saturday, and I took a micro lot trade to get day one in. And I know I'm only going to take one trade per day, and so the quickest I would be able to pass the challenge is if I won 2 trades in a row, I would pass the challenge. So I know it would take me a bare minimum of 2 days to pass the challenge. They don't have to be like in a row. Like I might take a trade on Tuesday and then not take a trade and then take another one on Friday. If those were both winners, those are 2 different trading days. That's why I went ahead and when I purchased the account, I did take a micro lot trade. Um, the account is still at $10,000 even after that micro lot trade. I made sure that it closed right there at break even. And so yeah, so I can if we win. So my goal is always to win, never to lose. No one is ever taking a trade to lose a trade. But I can pass a challenge in two trades because I go for 1 to 2. I risk 2% per trade. Two trades in a row, two winning trades in a row will pass a challenge. That's why I will be super picky about my setups and the timing of those and when they happen and such. So again, we have about 10 more minutes until the 8:30 market open for the futures. And then I will not be online for the 9:30 open. I am allowed to trade on Mondays, by the way. Like, don't think that I won't ever take a trade on Monday. Um, I'm just on a heavy news week. When you have a massive news event, let me just show you. If you guys, let me pull let me pull this up here. Here's the economic calendar for this week for euro and dollar stuff. So tomorrow, United Kingdom, UK's got employment change, unemployment rate. Then you've got, I don't know what ZEW is. And then tomorrow you've got core inflation, CPI. The day after that you have GDP for UK. You've got industrial production. You've got PPI, FOMC rate. The rate decision is on Wednesday. That's going to be crazy. Everybody's expecting them not to increase it. If it does, it is going to be crazy response, I think, off of that. Even if they hold it, it could be a crazy response. Japan's got information. Euro's got on Thursday. Thursday, there's not a whole lot going. Oh, no, this is Thursday. This is Wednesday afternoon and evening. And then Thursday, you've got retail sales coming out. You've got the euro interest rate decision. They are expecting to increase that. Business inventories. And then Friday, euro core inflation and then Michigan consumer sentiment. So every day besides today, there is just a massive amount of data coming out that could have a major impact on everything. And so yeah, this could be a complete sideline week. And that's okay because these kind of weeks often will set the tone for the next 2 to 4 weeks. And they can start these strong trends where you have a very clear higher time frame directional bias. And once you have those, man, you can just clean up. You can clean up. So I'm very content with just watching the news come out this week and very content with not taking a trade all week long and just waiting to see how this all shakes out and if we do get pushed into a higher time frame trend from all of this news data that creates volatility and liquidity grabs. So I'm not saying we won't trade. I'm saying that I'm content not to. And that's how you should approach it, because I promise you, professional traders right now are very content doing nothing. Prop firms are not booking traders this week. Every time, all week long, they're gonna have their copy trader turned off an hour before and at least an hour after every single red folder event. And why do they do that? Because they want to manage risk, and they know that there's going to be prop traders out there that are just trying to gamble and hit that winning lottery ticket on that big spike, but just as many of them will blow their accounts and get completely wiped out. It's just sad. It's sad how people view this business. It's sad how they approach trying to get funded and get these payouts. They treat it completely like gambling, and then they often wonder why they keep losing. Did anybody take this trade? I didn't see anybody in the chat take that. I didn't. Again, I told you I wasn't going to take it, but I did outline very clearly exactly why that would be a good setup. And if this was a different day, I probably would have taken that. But early Monday, I'm content watching this play out and knowing that these setups form all the time, and they're very strong and they're powerful. If we were in this trade, let's just play the what if game. If we were in this trade, let's just say this is 10 pips here. We'll make it an even 10 pips, and we would be going for 2.15. We would want to go to break even about 15 pips from our entry. So it's about 1-to-1. Not right now. It did get down to a 1-to-1 here at the bottom of that candle. So we did get to 1-to-1, but 1-to-5. I'm sorry, 1-to-1.5 would be somewhere around this area here. So somewhere around here is where I would move to break even. It doesn't have to cross that line. If he got close to it, I would probably move to break even. But that is a nice looking trade. How that played out. Very pretty. Euro is not showing the same weakness. Dollar's actually showing more weakness, and pound is dropping as well. So that's interesting. That the dollar's not bullish while the pound is dropping. But pound is definitely weaker here this morning than the euro. All right, y'all, I'm going to stay on for about another 15, 20 minutes here. Surprised my dogs aren't coming down. This is about the time. Every single day. Man, that was a really nice trade off of that 30-minute breaker right there. What a beautiful move. Clear draw on sell side liquidity below the Sunday open here. And because it had no wick left behind, we would anticipate that it would want to draw down there and leave a wick. I would move to break even. If you were in that trade, this is where I would probably move to break even. Again, it does not have to get to 1.5. That's my initial target, but if it gets close to that, this is the area in which I would look to move to break even. And don't forget to post trade ideas when streaming. Yeah, I will post them. If it's an actual live trade, I will post it on Twitter, David, for sure. But this was not an actual live trade. This is just live analysis in the moment. I sat down saying I probably wasn't going to take a trade today, especially early in the session here. So it could end up working out, but Um, for anyone who's just joining the stream and want to know how I trade, my main setup on this challenge, it's not the only strategy I use, but it is the strategy I'm using on this challenge, is I want to see a clear run on liquidity, and then I want to see aggressive displacement of Wei that creates a fair value gap inside of the breaker. So our breaker candle is the last down close candle that started the move up into liquidity. So you can see here we had a down close candle right here, which then started this aggressive run up into liquidity. You can see it clearly on the hourly, this hourly breaker right here. We closed down and then we ran liquidity, and then we immediately displaced back below that. See this energetic move down, another energetic move down. It closes below. Currently, it did leave behind, I think. Let me move this just for a second. Come on. Yeah. So there is still a small 1 hour fair value gap right here. It looks like it's leaving behind. So you could get another pop up into that and then another move down. But you can see on the 30-minute time frame, it didn't quite get to that fair value gap. It did reach up to the 50% area right at the open there. So it is a nice candle. If I would be moving to break even. If I had been in this trade, I would have moved to break even right there. And this would be a risk-free trade at that point. But that's the setup I look for every day when I come into the markets. This is a 30-minute. You can see it works just fine. We will use 15-minute often to try to get a tighter entry. We will at times drop down into the 5-minute. I often find that they are not as high probability as the 15-minute. 15-minute is kind of like my bread and butter. But you can see here on the 30-minute, it just was very nice. It didn't reach that fair value gap, but still would have been a very nice trade. Peter, can you look at EU? Yeah, sure. Is there something specific on EU you want me to look at? Because I did break down already on EU. We had a similar setup. We had our draw on liquidity. It ran. We used on the 15-minute time frame here. This would have been a breaker. It did leave behind fair value gap, but you never would have gotten an entry. You would have wanted price. I typically want to see price come up to around 50% of the breaker. And that would have also put us inside that fair value gap, but you didn't get that move. And so now you see price retracing and rebalancing these imbalances on the upside and the downside here. So I'll be interested to see how the euro reacts. You do have a no wick candle here on the 15-minute that it will likely, at least I think there's no wick on there. I think so. It will likely want to draw down into that, and then we'll see if you get any kind of displacement higher. But there's nothing currently on EU that fits this trade model other than this breaker block up here that it never gave you an entry on. So I don't know if there's, Peter, if there's something else you're seeing on EU that I'm not. That's kind of the current analysis right now. You had the Asian drop down, filled in the daily fair value gap. I talked all this through early on in the stream. There's a daily fair value gap here left over from last week. Euro dollar opened. The Asian overnight session dropped down, filled in that fair value gap, popped back up, took out buy side liquidity, and then have since pulling back into the fair value gap in here. There's really not a very clear trade setup here for me on euro dollar. You do have, again, you can see buy side or sell side liquidity here, right? If you want to look at this on the opposite direction, you could see that you're in this range. It drops down. Where does it drop down from? It's outside the range here, so I go back up into this candle. You could also use these consecutive up close candles right here. Here is your sell side liquidity, right? So where did this move start from? You could either say here, or you could use all of this right here. If you were using, let's look at this on a 30-minute. Yeah, this is really nice right here. This move started from this swing here. So here is your 30-minute breaker. Okay. Just a little education here this morning. You have a 30-minute breaker, these two up close candles combined, and inside of that, what do you have? You have a beautiful fair value gap nested inside of your breaker. You had a run on liquidity, and then you had displacement away. 3 consecutive energetic candles closed above. On the next candle, you would have had your buy order about 50% of the breaker and inside the fair value gap. So let's just call that about 50%. You would have put your stop below the candle that created the breaker. I'm sorry, the fair value gap, or below the breaker. So you could have put it here. I probably would have put it below this candle. And then you target 1 to 2. And you see how that worked out. That's also a beautiful setup on a buy side setup. Run on liquidity, displacement, fair value gap, inside a breaker. These both, that's a 30-minute setup right here. But that's also a very nice setup. If anybody was awake during London, that would have been a really nice play right there. Because you do have a draw on liquidity inside this fair value gap that you would expect price to want to draw back into and rebalance. So very nice. You didn't get the entry here, but you did on London. You did get that entry. It's a beautiful setup. Run on liquidity, displacement, fair value gap, inside a breaker. Take it. Clean that up a little bit. You can see how price is reacting off of the bottom of that. Remember, we identified this range here. It came down, completely rebalanced both sides of this imbalance here, and has pushed back up. It could still come down lower. Again, you have this no wick candle here on the 15-minute time frame. I guess it does have a teeny tiny little wick on it. So if you zoom in, you can see it right there. Let's go see how pound's playing out. We would have moved to break even on this trade had we taken it. That is a very clear draw on liquidity. Look, there was a no wick candle here, dropped all the way back down, left another no wick candle down here. I would anticipate that getting tagged here. Whether it comes back up to your break even and then drops again, maybe. Welcome to the stream, everybody. Pop in and say hi on the chat. If there's something you want me to look at, I'm happy to take a look. But always, if you find any value from this stream, I would appreciate you hitting that like button and subscribe if you haven't already. As I just do this completely for free to help people understand how you can pass these challenges and you can get to payouts. We're 30 days in. Since I started this channel, today is day number 30. And that's how fast it can happen. Once you know what you're doing, once you know what you're looking for, once you know how to manage risk, once you know how to manage yourself, be disciplined with your A+ setups, and be patient for them and wait, you can pass, get funded, and get to a profit split in 30 days, just like we did right here. You can go back and watch all the playlists and see for yourself. Hey, Alex, first day here. Man, absolutely, we're here every day. I do these streams every day, Monday through Friday. Subscribe, you'll get notifications. I've got every stream scheduled for the rest of this week already, but I'll be here live 7 a.m. New York time every day. I'm taking $10,000 in funding, and I'm going to grow that to $2 million in funding by the end of this year and document that whole process right here online. I call all of the trades here live. Follow me on Twitter. You can see, go back and look and see exactly how I did that for the last month. I post entries, stop loss, takes profits. I do screenshots. I literally tell you exactly what I'm doing all the way through this. If you had started with me from phase 1 30 days ago, you would have a funded account and a brand new challenge to pass right now. Had you taken every trade and executed, I tell you when to move to break even. I tell you when, everything. Like, it's all here for free, no charge. I wish I would have had this when I first started streaming. That's why I'm doing this channel. Once I figured out and became profitable, I've been trading for about 4.5 years, and it's only in the last year that I decided I was done being a stupid trader. I was done being a gambler, and I needed to be a professional. And so that's when everything changed. I figured out what professional traders do, talked to them, watched them, looked at stats from prop firms about who's getting payouts and what they do to get those payouts. And I was like, let me just do that. And once I decided to do it, that's when everything changed. So awesome, man. Glad to have you. Glad to have everyone here. That is the only model that I trade on this YouTube channel for this challenge. Breaker fair value gap. I do trade others on my other funded accounts. I will trade order blocks. But I want people to understand, the main reason for this channel is I want you to understand that if you master one setup, if you can just master one setup and be patient and only take those A+ setups, that's all you need. You don't need 5 different strategies. That's what's so confusing for most new people is they jump from strategy to strategy to strategy, and they try to incorporate this setup with that setup, and then they can't manage their risk well, and they don't have good data on which strategy is actually the most successful for them. So really, this is focused to people who are struggling to pass challenges, struggling to get funded, struggling to get a payout. I want to teach and model how you can take one setup and be profitable and change your life. You don't need to trade every fair value gap, every order block, every new week opening gap, every OTE, every consequent encroachment, every volume imbalance, Whatever it is, pick it is. Every support and resistance that shows up, whatever your model is. And I'm not even saying that you have to use my model. Like, I'm not trying to convince you to use this strategy. If you have a strategy, really the whole point of this is this: if you have a strategy that's profitable, be patient, use good risk management. You can do this. Now, you're also more than welcome to be like, hey, look at this guy. He's doing it with this specific strategy. Why not? Why not use it? You're more than welcome to. Absolutely more than welcome to. But that is the only model that I'm trading on this YouTube challenge. After I do this YouTube challenge, maybe I'll do another one and pick a different model that I use and just use that model and do it on a different firm. But on my other accounts, I do trade. I know how to manage multiple strategies and setups depending on how price is reacting. But long story short, yes, this is the model we use. Do you by any chance know any swing trading strategies? I'm not a swing trader. I don't like swing trading. I don't want to hold trades, especially in our current socioeconomic culture around the world. I don't want to be in a position that black swan news events could just ignore my limit orders, my stop orders, my take profits, whatever, and get hammered. So I don't swing trade, but Corey, honestly, this specific system would be a great swing trading system. Just use the daily time frame, and you can identify the same setups on the daily time frame or even a 4-hour time frame, and you could swing trade. So all of that would be something you could look for. Like right here, here's a beautiful setup that could have been a swing trade for you. So you had a run of an old high, right? Or even right here, either one of these. You had a run on an old high, you had displacement through fair value gap inside of a breaker, and there's your swing trade, 1 to 2. Yeah, this setup on a higher time frame, price is fractal. It all moves in conjunction with each other. So if you didn't know this was a 4-hour time frame, this could be a 30-minute time frame, right? And you would be expecting price to run liquidity, displace away, and then you look for that breaker and that fair value gap inside of it. It really is a great strategy to use on any time frame. If you go up to a 4-hour or daily, then you're going to be swing trading and you're going to be holding positions throughout the week or a week and a half, probably on a 4-hour time frame. I don't want to be in a trade that long. I want to be getting in and getting out in the same day, and see how that works. But Corey's an OG in here. I always give Corey props. He's been with me almost from the very beginning. Back when I was streaming to nobody. Those first couple of weeks when you start a YouTube channel and no one knows you exist and no one knows what you can do or knows anything about you, no one watches. Because YouTube, the algorithm's like, oh, this guy does not, like, what is he even doing? And then once you show receipts, you show validity, you show some credibility, then people start showing up. But Corey was one of the first ones in here, so I always give Corey props. He's the OG. But really, we're still in the very early stages of this channel, and by August, September, October, when we are trading high 6-figure accounts, I imagine more and more people will be in here. More than 9 people will probably be watching. Then all of you will be the OG 2.0s, all of you that are in here now. So you were here before the receipts. You actually were, my man. You were here before the receipts. How's your challenge going, man? I think last I heard you were around 2.5 or 3.5, or you had like 2.5% to go. I can't remember. Smart Prop Trader, I believe, is who you're using. But where's that account at right now, Corey? How you doing? Be bold. Let's hear it. Alex, I've not seen any receipts. Well, go look at my YouTube channel, bro. Watch the playlist. The first playlist is phase 1 and phase 2. The second playlist is the funded account. You can go on my Twitter and scroll back through my Twitter feed and see all the receipts that you need. Well, all right, guys, listen. I have to go on and get about the rest of my morning here, but we've laid out kind of what we're anticipating to see, and we're going to have a fun week watching all the news events, but I'm going to go ahead and call the live stream here for today. So I appreciate you guys hanging in here and watching. Hope you'll come back and be here the rest of the week. And yeah, we'll see how it goes. So, oh man, you lost your trade, 1.5. That's all right. You'll get it back. Hang in there, buddy. We'll see y'all tomorrow. Y'all be safe, happy hunting, and we'll see you tomorrow at 7 a.m. New York time.